Ethereum, it has been buzzing lately. We've seen it trending across Twitter, Instagram, Facebook, and many of the other social media platforms. With the completion of the shadow fork, Ethereum is now ready for the merge. Does this mean that the upgrade to proof of stake is going to be a moonshot for the price of Ether? Or are we going to see a drop in the price appreciation that we've seen recently? And are we going to see new lower lows? In this particular video, we're going to be jumping down into the data of the charts to try to answer just that, giving you the facts from the fiction and giving you the data to make your own assumptions and own conclusions, whether you are bullish or bearish on Ether. We are going to be taking a look at the monthly, the weekly, and maybe even the daily charts to give you a good idea as to what is going on here with the price action of Ethereum and what might actually be just around the corner. As we get into this video, if you find it useful, you know what to do. Hit the like button. I appreciate that. If you're new, make sure you subscribe and you'll stay up to date with everything that we do here at Cheeky Crypto. And remember, check out the description. There's a whole host of additional links down there. Everything from Discord, Patreon, Nexo, Ledger, etc. Well worth checking it out. Okay, let's make a start. Here we are with Ethereum paired up with USD on the monthly chart, and Bitstamp is our data source. There are several different areas that are of focus here, right? We have the all-time high at $4,868.79. We have the previous all-time high down at $1,420. Then we also have a point of interest, the $881 recent local low. This is also an area that we can marry up over this side of the chart here, as it was an area of March 2018's high point. So when we start to review this data on this monthly chart, there's several things that we need to be aware of. One, obviously, where we are currently now fighting up against this previous monthly close position, and we've been failing to actually close above this line. This is the previous all-time high at $1,420, going back as far back as January of 2018. And so as you can see, we're battling this area right now, and failure to close above this area is going to basically mean that we're going to feel a little bit more bearish, at least on the shorter time frames. So again, another closure below this area could mean some more volatility. Now, the biggest thing about this monthly chart that we should acknowledge is actually something that we can see on the smaller time frame. So I'll save that until we kind of move down to the weekly. But the other thing that we really need to kind of review here outside of Elliott wave theory is going to be our positions within our RSI and our stochastic RSI. So what I'm going to do is I'm going to bring up our stochastic RSI to start with. On this stochastic, we can see that it is super sensitive to price movement. It's ideally used when we're not in a trend, okay? And we can see that we're in this oversold area down at the bottom here, and we haven't really been moving too much to the upside recently. And during the last bear market, we can see that we were down in this oversold area for quite a period of time before we actually started to rally back up again. Okay, so where we are right now is actually pretty comfortable. We've been down here for a little while, but not too long. For clarity, if we come over to here, we can see that we were down here for a 395-day range historically, and at the moment we've been down here for 212 days. Okay, so we haven't been down in this low range for that long, and we can still stay down here for a few more months and it's going to be okay. That does mean that we're probably going to be talking about more price pressure to the downside. Now, if I go ahead and just pull this down and bring up our relative strength index, which is this one here, we can see something slightly different. We can see that we're not even in the oversold area, but we are at an all-time low for how low our RSI has been historically speaking. Okay, so in the last bear market, we did not come down this low before, and we have come down lower already. Okay, so this is an interesting kind of take, and it's well worth understanding, you know, that maybe we still have a little bit more room to come down to. Just because we haven't come down this low before doesn't mean it's not going to happen again. And normally speaking, when we have an RSI or a stochastic RSI, we're really looking for it to become oversold before we really start to get backing behind a position. That being said, there are many other reasons to look at the stochastic and the relative strength index, and you can't really just take one without the other anyway. Essentially, we are, if I draw a trend line on here, looking at this as a decline, and we can see that there's many different ways of looking at this, but if I were to draw a trend line on here, we could argue that maybe we've kind of went past it an area if we were to kind of draw a really steep one like this. But if we were to take it as a bit more of a curve across this kind of period, we could see that actually this could come up a little bit before moving back down again. And therefore, it isn't giving us a huge indication on this monthly chart as to what to expect from an RSI point of view or perspective. But what we will do is we'll have a review of this in line with our stochastic. When we look at both of these together, we actually see a pretty interesting story. Both of these were overbought together at the same time, but they're not in the oversold area at the same same time. And likewise, when we were oversold in the previous bear market, we were actually quite comfortable around this mid-range point. So again, being where we are isn't actually too bad, and we can kind of hover around this period for a while, right? So we can be down in this oversold area for a while without actually really moving that RSI too much. Okay, as I said, the stochastic RSI is a lot more sensitive to price movements than the relative strength index, and therefore you can see this moving up to the overbought area more sharply than you can with the relative strength index being a bit more of a linear kind of curve to it, a little bit more kind of curved out as an average, right? So it's interesting to kind of see this. Now, from our stochastic RSI being oversold, historically over here as well, we can see that we were actually down here for quite some time. So there's no harm in thinking that we're going to just trade sideways on this RSI for a period of time either. Okay. So that is our monthly chart. There's some other interesting things that are going on. We could review the EMAs, for example, the 10s and the 20s, and all that kind of good stuff. And if I just collapse these down, these are probably worth kind of just paying attention to. Just so when we have these kind of things cross, we can see that they cross, and then basically the month after they've crossed, we actually bottomed out, okay? They're about to cross, so does that mean that we're about to bottom out here? Does that mean that we're going down, etc.? Now, there's not a huge amount of information here, a huge amount of data to say that there's categorically this is going to happen, but a cross has happened here, so we would expect maybe some downward price pressure. And historically speaking, for Ethereum, they've crossed and then we bottomed out the month after. Again, these are really loose. I wouldn't really hang my hat on these, but it's worth knowing that those are metrics that a lot of other traders will be looking at. Okay, let's move down into our weekly time frame. Okay, now the weekly time frame gives us a bit more of a steer as to what's going on. So let's talk about that Elliott wave theory that we kind of briefly mentioned on the monthly. Basically, I didn't want to draw it on the monthly because it's actually quite hard to see when you can see it a lot clearer here on our weekly time frame. Now, Elliott wave theory gets broken down into several different sections. We can ultimately consider things trends, or we can consider them corrective structures. Those can move in either direction. We can have a trend up or a trend down, and we can have a correction up or correction down. Now, corrections are generally 3 waves and trends are 5 waves. And in the case of Ethereum here, we are trending to the downside. Okay, that's kind of the thing that's going on here, but we'll talk about what's going on the smaller time frame in a second. But on this weekly time frame, it's a trend to the downside. I'll show you why this is. If we go ahead and measure the distance using the Fibonacci retracement tool from our low down here at 2,160 USD up to this high up here at 4,868, and then move this over to this bounce area just up here, which I will go ahead and just grab a horizontal line, map that on there, it's $3,582. Okay, so if we were to go ahead and adjust this and just put it on top of that yellow line there, we can see that we came down with this wick past the 1.618. This 1.618 target just down here is an impulsive trigger point from an Elliott wave theory point of view. A wave 3 is typically 1.618. And in this case here, what we've got is an entire map from the upper side of the all-time high down to this low point where we actually moved down to 881 USD, being a wave 1, 2, 3 structure. Okay, a 1, 2, 3 with a 4th wave moving up and a 5th wave yet to come. So if I go ahead and draw this on, what we've actually got going on here from an Elliott wave theory point of view is 1, 2, this is 3, this is 4, and we're still waiting for 5. Okay, now when it comes to Elliott wave theory and understanding the rules behind Elliott wave theory, there are some unbreakable rules. Wave 4 is never allowed to cross wave 1, and wave 1 is set here at $2,160. Okay, and obviously we did not cross that with wave 4, and we've started to move to the downside. This basically means that wave 5 is still valid, and we could still see the price action of Ethereum moving to the downside. Okay, so as we start thinking about a merger and a sell the news event, there's potentially going to be a catalyst here, or that is potentially is the catalyst of this final 5th wave to the downside. Now, when it comes to Elliott wave theory, and don't want to be overly too scary here, but we should also consider that wave 5s do not usually just appear on their own. They're usually a part of a much bigger structure. So if we're having 5 waves down, then my expectation would be 3 waves up. Okay, this could be the next bull run, and actually we just see, no new all-time high in the case of Ethereum. And then, of course, from here we end up moving with another 5 wave structure taking us down. That would then actually be a zigzag pattern and would complete our 5-3-5 structure. Okay, and then that's a super long term. That's multi-year kind of scenario. So we don't overly think about it, but obviously that is an implication of completing a 5-wave structure here. So if there is going to be a sell the news event and we are to see the price of Ethereum drop to the downside, then we should definitely be considering that this is actually going to be bearish a lot longer term than maybe we were willing to acknowledge, as in a bull market comes and goes, but Ethereum does not go up to a new all-time high. Okay, so that's kind of Elliott wave theory on this weekly chart. Let's now talk a little bit about that stochastic RSI. Now, the stochastic RSI is oversold on that monthly chart, but it is not oversold on the weekly chart. Okay, now that's a huge difference. And basically, if we were to review where we were previously at the similar area that we are right now in terms of this stochastic RSI, in fact, if we were to review the last 2 times that we're in a very similar area on the stochastic, we would say that we had the all-time high the last time we were there. We could also acknowledge that we had this wave 2 bounce by the time that we were there. And we're on this wave 4 bounce right now, and we're also up into this overbought area. So what does this tell us? Well, this is telling us that we should be expecting some downward price pressure, at least on the weekly time frame. And the other thing that's really consistent here is that we are trending to the downside. The price is moving down and the stochastic RSI is revisiting this overbought area. Okay, so from a stochastic RSI point of view, things are looking a little bit bearish here on the weekly time frame. So that really does tally up with Elliott wave theory and the structure moving us down into a final 5th wave lower. Now, what I'm going to do is I'm going to bring up our relative strength index. Now, the relative strength index is actually telling us that the price is moving back up again. But again, you know, very similar kind of scenarios here that are going on. If I were to draw a trend line from the all-time high just up here on the chart, and I was to go ahead and just pull this to the downside, you can see that we're retesting this area. And we'd almost tested this high just up here. If I pull this a little bit higher this way, we can even see that this goes back a lot further. Basically retesting this trend, and we kind of move to the downside. So I'm expecting us to test this and get rejected from this on the RSI point of view and move back down to the oversold area. And in doing so, we'll line up our oversold weekly RSI with our oversold monthly RSI, and the same for our stochastics. They'll also move from overbought on the weekly to oversold, which will marry up with our monthly. So I'm looking at this as a last kind of push on our weekly chart to take us down into these new lows that would basically complete our structures. This is between $500 and $700 for anyone who does not stay up to date with the live streams that I do on a Monday, or well, every single morning, in fact. So I'm going to leave that there for thoughts on what you kind of think about that. But essentially on our weekly chart here, that is what we are seeing. Okay, so let's move this down into a daily time frame. The daily time frame is also incredibly interesting, and it's interesting for a couple of different reasons. I'm going to do this on the daily. I normally talk about this on the 8-hour chart, but I'm going to do it on the daily just to help us understand what's going on. So from our local low down here, if I go ahead and just hit this on here for a second, $880, okay, that being our local low in June, we started to move to the upside. Now, the structure to start with is very much overlaps. It overlaps a lot and basically is not indicative of a trend, but very much a corrective structure. So we have 3 waves up, 3 waves down, for example. Then we start to move up in 5 waves. We have a pretty clear 5-wave structure going on within this little section just here, and that is a micro trend as a part of our corrective structure. Okay, so as I said, Elliott wave theory sometimes can be quite confusing, and basically this would be considered, at least looking at this in first little part of it, as a 3-3-5 corrective structure. However, because of the whale wallets, and the whale wallets of what I mean and referencing here are the wallets from the Ethereum whales. Let me just bring that up on the screen here. They have been kind of heavily accumulating, but they heavily accumulated at around this price here of $1,600, 1,636, I believe. Okay, so they started to heavily accumulate, and you can see this in the light blue line, which is the number of wallets holding 10,000 Ethereum or more. Okay, now they didn't buy at the bottom, and I'll show you what that looks like in a second. They didn't buy the bottom, they were basically just buying this particular pump to the upside. And then they started to come out, and then they pushed it up, and then they pulled back down, and so forth. And they're still accumulating right now, which is an interesting thing to see. So why I say this is, well, basically, if I were to go ahead and find the actual date in which they were to do this, let me go ahead and find a vertical ray for this. I'm going to find the 28th of July right here. Okay, so what happened is that they basically were buying this particular area. And even if they bought it at the best possible point of that day, is right about there at $1,600, right in the middle of this area here. Now, what's interesting about this is that they decided to buy that particular area. They didn't buy a few days before down here. Okay, they didn't buy down here. They didn't buy here, and they didn't buy over here. They bought specifically here. Now, what's interesting about $1,600? Well, we saw an immediate kind of retracement. Okay, so they could have bought cheaper if they just waited a couple of days and bought down here, but they didn't. Instead, what happened is they bought here and they heavily accumulated during this particular pullback, and then the price went up to this area here. Now, this high point, okay, if I just go ahead and remove all those circles off the chart here, and I'll map in this high point just here at $2,031. They basically propped the market up. It should never have actually reached that high, and if it wasn't for these whale wallets accumulating during this particular area, this price actually would have ended somewhere around here, making this a very, very simple 5-wave structure, which I'll show you right now. 1, 2, 3, 4, and 5. Okay, if they had not purchased at this point here, this would have been the structure complete. Instead, our 5th wave overextended and took us up to this point here. Okay, now that's unusual, but it does something more powerful than just extend that 5th wave. Instead, what it does is it tells Elliott wave theory that this entire structure here is now potentially impulsive. And what I mean by that is that this from the bottom here at $880 is a wave 1, this is a wave 2, and all of that is now a wave 3. That means that this has to be a wave 4 and we have to move up higher into wave 5. Now, that's contradictory to what is going on with our weekly time frame. Okay, so really interestingly is that what those whale wallets were doing in terms of that those whales were operating is they created a structure out of thin air. They basically accumulated Ethereum at this particular area that drove the price up to a point where it hit over 1.618 times our little pump down the bottom here. And as a result, that means that we should be thinking about this potential move to the upside. However, things are not as clean cut as that. They get a little bit more complicated. Because of wave 4, and with all the rules of Elliott wave theory, these are very important ones, wave 2 and wave 4 should only ever contain 3 waves. And we actually have a 5-wave drop to the downside within this little structure here. Now, on this daily chart, it actually looks reasonable. It looks like a 3-wave structure, which is why we like to look at this on the daily or the 8-hourly, because it actually, shows us a more bullish kind of scenario. It's a 3-wave drop, right? So therefore, it aligns perfectly well with that narrative that we are pushing up a little bit higher, and we should be expecting that next move. And if that were to play out before we see a sell the news event, which I do personally think we are going to see, then essentially our targeted range would be right up here for Ethereum. It would be between $2,209 and $2,532, right? Which would invalidate the macro weekly move to the downside. Okay, so understand that there's a lot of different kind of moving pieces to this puzzle, and essentially those whales are a key element as to what they bought here and what that drove out later. So there's a push potentially to the upside, at least apparent on the daily or 8-hourly chart. But when we come down lower and we talk about the movements that have been going on with our hourly chart, we can see things slightly differently. We see this as a 5-wave structured move to the downside rather than a 3-wave drop that we actually have it mapped out on the larger time frame. Okay, this here being our little wave 4 and an overextended wave 5. Okay, so when we start reviewing this, what do we actually see? Well, we can see ourselves moving around a little like this and a wave 4-5 coming down. Okay, now a wave 4 is not allowed to have 5 waves inside it. It has to be a 3-wave structure. So we're looking for 3 waves up, 5 more down. And in doing so, you create that 3-wave structure. However, there's a bigger problem. When we create that zigzag, that 5-3-5 structure here on the hourly chart, that basically will invalidate that daily bullish movement to the upside. So in a nutshell, guys, what I'm kind of say here is there's actually a lot more reasons to break down this data a little bit further and actually go down into more bearish 𝗕𝗘𝗪 than bullish 𝗕𝗘𝗪. Essentially, a lot of the data inside Ethereum here feels like it's a little bit more manipulated, specifically with those wallets accumulating at very specific points. One of the things I do like to focus in on, though, is that weekly time frame. The weekly is a really strong macro. It helps us understand what is going on. It is very aligned to the monthly time frame, but it does also say that we have to move down before we can move up a little bit higher. So I do think that we are more likely to see this scenario play out, but all eyes are on invalidation. If we do push that price up higher than our wave 1 origin level, or our wave 1 low point just here at $2,160, then there is no requirement to go down into new lower lows, and that's the biggest bullish indication that we could have for us. It does not, however, mean that we cannot go down lower. We can get very close to where we were before. We could go down to $1,000, just not into new lower lows. And if we do have that daily 5-wave structured move to the upside, that's a really positive for Ethereum long term as well, as it can prevent all of those bearish scenarios of zigzag patterns moving us down into significantly lower prices. So in a roundabout way, we kind of want that, but we also want to make sure that we're communicating the right kind of structures, the right kind of data. Right now, I think we are more likely to see downside than upside. But personally, I would like to see Ethereum push up. I would like to see Ethereum go and invalidate the weekly move to the downside, as that would be the really bullish scenario for crypto overall. But I would still be expecting Ethereum to move down to reasonable lows of around $1,000 for a good accumulation, because at some point, the weekly time frame does need to correct down. So even if we do manage to have that bullish move to the upside, I would still be calling out $1,000 as a good accumulation zone for Ether. Guys, I'm going to leave this video there. Let me know what you think in the comments down below. Do you think the merger is going to be a sell the news event? Do you think there's going to be enough momentum to drag the price down to those $500 to $700 lows? Let me know. Really interested in your thoughts and opinions. Guys, until the next one, have a fantastic day.